Welcome back to the channel, Market Hawks, where we stalk the market, where you come get your financial gain so they don't run a financial train on you. Now, what I want to talk to you all about is something a little different. Most of the time, everyone always talking about how stocks are going up, assets appreciation, they're making money, and they're gaining wealth. I always tell you, wealth is made in your sleep and not on your feet. But I want to tell you all about something. Now, CAVA. For instance, I was in the CAVA for a while. We had CAVA. We probably rolled CAVA stock from maybe $45 to up to maybe $130 or $40. But it's a good stock. And at the time, I had options on it too. I had $80 calls. I think I started buying $80 calls at maybe like 72, something like that. So I wrote it up to about 92 on the calls, but I had been sold the stock. So I seen the investment in the trade begin to break down. How did I see the investment in the trade again break down? Now, without using technicals, a lot of investors use technicals. Nothing wrong with that. Technicals give you a strong indicator of the buying and the selling. So what I seen was the economy started to slow. I seen that evictions was picking up. I seen that there was 300,000 women laid off. I seen other jobs being laid off. I just seen a lot of stuff in the economy. I seen that people were spending less, and I figured that people would have less disposable income to go to CAVA and spend money. They would start going to places like McDonald's, Burger King. That's more, makes more sense for their pocket. I understand it's hard out here. It's not easy. So when I realized and I seen that Wall Street analysts had came out and downgraded CAVA. So I end up getting out of that stock way before then, but I had the call options. So it went to about 92. It came out about 88 on the call options. So I knew the trade was breaking down. I was looking at the economy, so I ended up getting out of the trade. I walked away with a few dollars. So I was able to see that, but people don't ever tell you about that. How to know when a stock is breaking down, how to know when the trade is over. But the way I did it is not a traditional way. I just use the economy. I know that people wouldn't have enough income coming in to feel comfortable to go to CAVA and to begin to keep shopping, spending that type of money. So I used my economic awareness to be able to see this. Because when I was looking at CAVA, I was looking at the tariffs. When the tariffs had the market in a downturn, what I tend to do, I tend to look at a company and I see how it pulls back. That tells you the strength of the company. When a company pulls back very, very hard in hard times, to me, it is not financially strong. That might not always be the case, but usually to me, when it has drastic drops, it is not financially sound fundamentally. Because usually when a company is strong fundamentally, it will have a floor. It'll usually pull to a certain level, a certain price, and it'll bounce around that price and it'll stay around it. But when I seen how the company pulled back with the tariffs, I didn't really like how the stock was pretty much behaving. So I look in the economy. I know that evictions are up. You have McDonald's, you have Chili's, whereas though they're offering meals for anywhere from $12 to $14. CAVA's slot bowl usually start from $14 to go to $17. The consumer just does. They don't have that amount of discretionary income, so that they can go and buy stuff at the level. People are kind of in the phase of out here of buying what they need less than what they want because layoffs are high. The economy is just squeezing people right now. Then CAVA had the expectations were 6%. They only bring in 2%. Future forecast was down from the guidance wasn't looking good. I seen a lot of indicators. The future guidance wasn't looking good. Then the same store sales were down. And I know that the store depends off of the everyday consumer that's buying food at lunchtime or at dinner, but mainly lunchtime is when, dinner where they'll make most of their pretty much their cash flow, I would say. So when I seen this and the stock was behaving the way that I didn't pretty much like, so I said I'm going to cut this and go to something more safer. So when I seen the trade breaking down, I seen the same store sales. The revenue is still high. The revenue is still growing, but the same store sales is down. The future guides was down. Um, their earnings was down. They got downgraded. All this stuff allowed me to know that this trade was breaking down. So for me, that was my indicators. When I looked at the financial health and the fundamentals, so I knew that it was time to get out of it. And I got out of it months ago. It's still a good company, still a lot of growth, but it's not always great to buy the dip and chase the hype. Don't chase the hype. Do your homework. Don't just take it from me. Do some research. Go in and look at the fundamentals. See what this company's cash flow is. See what their revenue is. See what their debt. See what their sales. Learn all those things and then look into the stock and see how the stock is moving. It'll give you an idea of what's going on, what's the story being told. But I always tell y'all, we have to stay economically woke so we won't go or stay broke and spend money less on things that don't matter. Pay attention to your investments. Don't just listen to the average guy on YouTube and just buy any stock. But welcome back to Market Hawks whenever you can. Come get your financial gain so they don't run a financial train on you.